So the government came out earlier this morning before the markets open with their consumer spending numbers. And this is a number that, Wall Street watches, but I don't, pay particular too much attention to it, just like other measures that I think are irrelevant, like consumer confidence. But consumer spending climbed by 0.7%, which was higher than the forecasts. But I don't measure an economy by what Americans are spending. It's what they're producing that counts. Everything that's produced is going to get consumed. So the spending part is the easy part. That just flows naturally. The hard part is to produce things that people can buy. So what you really want to look at when you want to take a look at economic performance or numbers is industrial production, capital investment numbers, things that would show production. And also one of the things you want to look at would be the savings rate, which is also part of the income and spending data, because the money that is earned but that is not spent is saved. And the savings is what is laying the foundation for future economic growth and future production. So if anything, Wall Street, when they look at this number every month, should not be looking at the spending part. They should be looking at the savings part. And if savings are up, that should be good news. But it's the opposite. If savings are down, it's good news. They don't want anybody saving because they want everybody spending. But that's not economic growth. All that's doing is keeping the phony economy and the phony earnings that are being generated going for a little while longer until the whole thing completely collapses. And so the savings rate dropped. I guess now it's down to 5.3%. That's the lowest savings rate since March of 2010. The savings rate is headed back down. I think it's going to be back below 5% sometime pretty soon, which is wholly inadequate. We really need to be saving north of 10%, probably quite a bit north. We have a lot of spending to counteract or to atone for. We have a savings shortage in this country, and we need to replenish our stock of savings, and we're not going to do that if we get all this consumer spending. This is the biggest increase in consumer spending, I think, from last year in 4 years. I guess it came from a bit of a downturn the year before, but still, and I mentioned this yesterday with respect to the GDP numbers, given the complete loss of home equity and the fact that real estate prices are continuing to fall, and they will continue to fall. So the home equity is gone. Unemployment is still above 9%. We're going to get the jobs numbers this Friday. We'll talk a lot about the numbers when they come out, but it is probably the most watched of the economic numbers, heavily talked about or anticipated numbers in Washington now. But I lost my my train of thought. Oh yeah, with all these people that are unemployed and the threat of losing your job, people know if they lose their job, they're not going to get one right away. Given all the unemployed, they're going to stand in line. So you would think that people would be saving more, given the economic uncertainty. That would be a good thing. You save for a rainy day. I mean, it's obviously going to have, we don't have the greatest weather right now, so people should be saving. And the fact is they're not. And these numbers also, are similar to what we got out of the GDP numbers on Friday, where you had a big increase in final sales and spending. And I think it's about inflation. See, I don't think people are spending more on new stuff. They're just paying more money for the same stuff they're buying. I think a lot of it is higher prices, but the government says no. If you look at the measures of inflation, again, that are a part of this release, the government has claimed that inflation is the lowest it's been since 1959. So in other words, I wasn't even born. I was born in 1963. So the government is saying that inflation in 2010 was the lowest in my entire life. Now, I just don't believe that for a second. I mean, we're going to talk with Eric Boland coming up in about 10 minutes about the riots over inflation in Egypt. In fact, inflation is probably the biggest political adjutant right now all around the planet, yet somehow it's absent in the United States. Everybody else has got an inflation problem except us, Meanwhile, we're printing money like it's going out of style. So it just doesn't jive with reality that inflation is this low. Yes, it is lower than it would be if we didn't have the reserve currency, if we weren't forcing the rest of the world to eat our inflation, but they're not eating it all. I mean, some of it is winding up on our shores, and the fact that the government is claiming that there is none is disingenuous. But anyway, Wall Street is celebrating the fact that Americans recklessly spent themselves deeper into debt in the last month of December. So it's great news. We spent more money we didn't have. Personal incomes only went up by 0.3, but we spent 0.7 more. So we gutted our savings. We bought more imported products. We drove the country deeper into debt. Congratulations, America. According to Wall Street, we're doing a great job. Anyway, let me go to the phones. Next caller is Michael in New York. Michael, you're online.
Hey, Peter. How are you? Good morning.
Good. How are you?
Good. Just going back to your argument about the government versus free market forces. It's kind of, I don't know, it's just a little confusing. And so, you feel they should get out of the way, and then free market forces should dictate what people want and don't want. But you also have to remember that people don't always act or do things that are in their best interest. So you and I both know they should save and not spend, but yet they're spending.
Right, but remember, they're doing that.
Their best interest.
They're doing that because government is incentivizing them to do that. We've got interest rates down at zero. Who's going to save when interest rates are at zero? The government is giving tax breaks to debtors. The government lets you write off mortgage interest on your taxes. The government is subsidizing through the Federal Reserve credit card debt. The government itself is directly subsidizing automobile loans, underwriting the loans themselves. The government is subsidizing people to buy homes that they couldn't afford with money they couldn't borrow if they had to prove their own creditworthiness. So this is not people doing what they would normally do. The government is causing a lot of this. But yes, sure, certainly there are people that are not going to exercise, that are not going to eat healthy foods, and maybe somebody can say, well, they shouldn't be doing that. They should be, exercising more and watching their diet. But that's not up to a bureaucrat to decide. That's up to individuals to decide for themselves. We're a free country. We can make up our own minds. Sometimes we'll choose right. Sometimes we'll choose wrong. But I know one thing, that individuals will make better choices for themselves than governments will. Because individuals care more about themselves or their own children than some faceless bureaucrat thousands of miles away pretending that they know what's in their best interest.
Government said, hey, everybody needs to stop spending, save your money, and let's try to, build the country back up. Would you then turn around and say, hey, government, get out of the way? We can decide for ourselves.
No. If the government got out of the way, people would be saving. That's the point. In fact, I've actually heard people criticizing China because they're saying they need Social Security in China. They need unemployment compensation because the Chinese are saving too much because they know if they lose their jobs, the government's not going to give them any money, that when it comes to old age, if they want to retire, they have to have their savings. So people are saying the government in China needs to have Social Security and needs to have unemployment insurance so that people will stop saving. My point is, if the government gets out of the way, people will choose to save out of necessity. They'll understand what the right thing to do is. We don't need the government to tell people to do what's right. They will do what's right on their own. It's government policy that is making people do what's wrong.
All right. Well, thank you. Thank you very much.
Thank you very much. And yes, does that mean, yes, smoking is bad? People will smoke. But you know what? Some people like smoking. Look, George Burns lived almost 100. He smoked, 2 cigars every day for his entire life. Would he have lived to 110 if he didn't smoke? I don't know. Maybe he would have died sooner. Maybe smoking kept the guy alive. I don't know. But people should make their own decisions with respect to what they're going to do with their body or what they're going to save and what they're going to spend. When the government comes in, they get people to make bad decisions. Anyway, don't go away. We're coming up with my guest, Eric Boland, at the top of the next hour. We'll take more of your calls. This is the Peter Schiff Show on SchiffRadio.com. Welcome back, everybody. The second hour of the Peter Schiff Show is starting now. You're listening on SchiffRadio.com. And I am joined now by Eric Boland, who is the host of Follow the Money over on Fox Business. I happen to do that show quite often, and as I said earlier, I'm not really sure when it comes on, because sometimes I see it on at 9 p.m. and sometimes I see it on at 10 p.m., but it's always on in the evenings on Fox Business. And Eric, are you there?
I'm here, Peter. Thanks for having me.
Hey, well, thanks for coming on my show. It's a little bit of a change because I'm normally on yours. Anyway, I noticed in here that it has your name is Eric the Admiral Bolin. I've never heard that. What's the Admiral?
Well, I started at CNBC. Remember Fast Money? I think you've been on Fast Money a couple of times.
Yeah, well, I think you were one of the original Fast Money panelists, right?
I was the first one there. I was there when we were still debating whether even to do a show like that, and we ended up bringing on 4 traders and then bringing on Dylan Radigan eventually, and it was a lot of fun. Anyway, they named me the Admiral.
On that show. Okay.
Yeah, that's where that came.
But anyway, so, I just was reading a news story. I guess they got some inflation numbers that came out of Europe today, and it shows that Europe is showing their highest inflation numbers since August of '08, which is just before the financial crisis interrupted, that commodity rally where oil was $150 a barrel. The CRB was way above where it is today. And now Europe is having its highest inflation since that point. You've got inflation problems all over Southeast Asia and China. Now we've got problems in Egypt erupting in large part because of inflation. Yet today in the consumer income and spending data, the U.S. government is telling us that inflation is the lowest it's been in my lifetime since 1959.
All-time low.
How can there be inflation breaking out all over the world, yet somehow it's bypassing the United States, the issue of the reserve currency that has got the printing presses running full steam?
Well, Peter, I'm preaching to the choir here when I tell you this because you know very well what we love to do here in America. We like to talk about inflation, but we want to leave out food and energy, the most volatile. They call it because they're volatile. They want to leave them out, but probably the things we use the most, they want to leave that out of the consumer price index and the other things. And then they'll add in things like housing, which is clearly a drag on inflation. So you don't buy houses every day, but you certainly buy bread and milk and drive to the store to do it in your car that you fill up with gasoline. So you can go ahead and remove food and energy and tell yourself there's no inflation, but the rest of the world knows it, and we should know it too.
Yeah, well, it's actually what's more important when you're measuring housing is not the cost of buying a house, but the cost of maintaining the houses that you already own. And a lot of that is energy, and a lot of that is insurance and taxes, and all of these things are going up. So I would argue that home ownership is getting more expensive, even if the purchase price of homes are coming down.
Yeah, no doubt. No, the cost of everything is going up, Peter. I mean, people say, well, I point out the price of cotton, trading at all-time high, not just monthly highs or yearly highs, all-time highs, 147 years of cotton trading, and we're trading near the highs or at the highs. I mean, everything we wear, polyester has a lot of oil in it. Cotton, jeans have a lot of cotton in it. Everything we eat has some form of high fructose corn syrup in it, one way or the other, for flavor. That's corn. Corn prices are on, 2.5-year highs. You know the rest. You know the rest of the story. Sugar, near all-time highs. Coffee, near all-time highs. Things are going up.
And the only time that we've had this type of commodity environment was during the 70s. And that's because we had inflation. I mean, how can we have these surging commodity prices across the board, yet somehow it's happening in an environment where there's no inflation?
Yeah, because there's no jobs, because 14.5 million people out of work. If you ever put, half of those people back to work and get the unemployment rate from 9, whatever it is now, 9.
Well, I don't think putting people to work is going to is going to cause more. You don't think
that's going to jack up prices?
No, I think as people lose their jobs, it's going to put more pressure on prices because it's more quantitative easing. It's more money printing. It's more deficits.
Well,
look at Egypt. Yeah. Egypt has unemployment of what, at least 10%, yet their inflation is 14%. I mean, keeping people out of work in Egypt isn't keeping prices down.
Well, that's because they keep, they're doing whatever, all these, fake ways of feeding people and clothing people by giving them stuff. I mean, we're hearing about countries who are now going to hoard grain because they're worried about higher prices. Well, when they do that, they drive the prices of the grains up.
when people go to work productively, let's assume we created more jobs. Some of those jobs might be in agriculture, producing more food to keep the prices down, or producing more products. So people producing things keeps prices down. It's when people aren't producing things and when government is producing money instead to hand it to the people who aren't working, that's when prices go up.
Peter, if that's the case, if the government says, well, because unemployment's high and the economy's slow, we're going to go ahead and do these $600 billion quantitative easing plans every couple of months, then I agree with you. But if they were to stop doing that and then just, start, all of a sudden people had more money, they were going to work, they'd start to spend, I think we'd be substantially higher inflation here.
Well, if you think of the traditional way the government fights inflation, or at least recently, is with tighter, higher interest rates, right? They hike up interest rates. But the one thing that's stopping Ben Bernanke from raising rates is the high level of unemployment. So if unemployment were higher, he might be willing to fight inflation by raising rates. But what he said is, since there's all this unemployment, I'm not going to fight inflation. And in fact, if unemployment were to get worse, then they're going to deliberately create inflation. So you can see that the more.
But let me do this, Peter. Allow me. I apologize to cut. But really, inflation in my 23 years of doing this, really inflation can really be tied to the price of energy, the price of oil, the price of gasoline, and the price of natural gas. We're trading $90 a barrel for crude oil with 14.5 million people out of work here, with an economy that can barely muster 2% growth, with the world kind of on its ear, not really sure where they're headed. Can you imagine if things were better, how much we'd be paying for a gallon of gasoline? We'd be paying $7, $8 a gallon.
Well, but part of being better might be producing more oil and gas, having more oil and gas exploration.
Really? Where? In Saudi Arabia?
Well, we know there's oil offshore. We're not even drilling it.
Well,
look at all the rigs that are leaving the Gulf of Mexico because the Obama won't issue any permits. And of course, we got a lot of oil up in Alaska. We're not doing anything about. But I think that if you really want to look at what's going on in the inflation, you got to look at the reserve status of the dollar. And the fact is that the reason that we are not experiencing the more rapid price increases here is because the Egyptians are experiencing, or the Chinese are. We're printing all this money, and it's going all around the world, and the world is absorbing this inflation for us. When they stop doing that, when the global currencies appreciate dramatically, then you're going to see a big drop in the dollar and an increase of prices. And even if we throw 20% of our population out of work, prices are going to be skyrocketing, because what happens is when the dollar collapses, we can't import products anymore, so supply contracts. In addition, the products that are made in this country get exported. So even though we have a lower demand because of unemployment, we have a collapse in supply, and supply falls faster than demand, and prices go up even as the country's out of work. Make sense?
I like it. It makes sense. My only point is, if we had a 5% growth here in this country, and been trying to continue to grow, I think we'd be paying $200-300 a barrel for oil and $6 or $7 a gallon of gasoline, whether or not people were working. You know what I mean? So, again,
I think that's coming. I think all that is coming. Anyway, let's talk more about this after the break. You're listening to Peter Schiff with Eric Bolin on the Peter Schiff Show on SchiffRadio.com.
My conscience says my hands are shaking. There's no way I can stop it now.
The Peter Schiff Show. To President Obama, Secretary Geithner, Madam Pelosi, and all of the socialist econ professors across America, we're sorry. Peter Schiff is back on the air.
Welcome back, everybody. This is Peter Schiff on SchiffRadio.com, and I am speaking with my host, Eric Bolin, about inflation. And, the dollar index, Eric, today is hitting its lowest level since November 10th. And, last year the dollar did make record lows against several key foreign currencies, yet the government is telling us that inflation in our country is less than inflation in those countries against which whose currencies the dollar is falling. I mean, how can a country with a weak currency have lower inflation than countries with relatively stronger currencies?
Peter, as we speak, I'm watching oil tick up. Oil's up 80 cents a barrel right now. Brent, the European version, is 30 cents away from $100 a barrel. Don't tell me that there's no inflation here. You can call it core, you can call it CPI, call it whatever you want, but include food and energy when you do your inflation metric. It's
that's
a joke.
also an interesting thing. I know you were. Now, when you were a trader, were you just a local trading for your own account, or were you?
Yeah, no. I was, at my peak, I was probably the largest independent natural gas trader in the world. I mean, I traded quite a bit of volume of crude, natural gas, gasoline. Also traded gold and silver.
Because I always remember, North Sea crude, Texas, being higher than Brent. And for a long time, Brent is quite a bit higher than the Texas.
Yeah. It's we're trading right around $90 a barrel in light sweet, West Texas light sweet, and then the Brent is like I said, approaching $10 higher than that, $100.
Yeah, I mean it's normally it's always been the Texas is a couple of bucks higher. I don't know what's been going on there.
Well, North Sea production is dramatically down. I mean that's part of it, and then you have situations where you worry about delivery into the Brent contract. Look, if the Suez Canal closes, it's a 6,000-mile trip around the southern tip of Africa. I mean, it costs a lot of money to do that. I think one of those VLCC, one of the big tankers, they say could cost $15,000-$20,000 a day.
Yeah.
Add how many days of transport cost onto that? That's substantial transportation cost.
Mm-hmm. Yeah, and so I guess some of it could be from weaker economy here in the U.S., so there's not as much need to bring oil here, and so the oil that's already over in Europe is a premium because you don't have the freight charges, maybe to get it over to where the economy is growing, or economies are growing faster.
Yeah, that could be, but it's one of those things where. Like I said, 23 years in the business, and I think all but maybe a year of that, West Texas or light sweet crudes were always more expensive than the.
So do you still keep in pretty good contact with some of the traders down there? And
I do.
I mean, what do they make of what's going on? I mean, do they think that prices are just rising, or do they understand?
I got to tell you, I'm watching this thing, and on Friday, my hands were shaking. The oil market opened, unchanged, slightly higher, and I'm watching these protests. One thing I've learned, Peter, and when you see the Arabian youth fist pump, usually oil is on its way up, and sure enough, we ended the day almost $4 a barrel higher. I would honestly, and again, hindsight, it would have. But this morning, I'll give you another example. I was on Fox and Friends this morning before the oil market opened. And I said, be careful, because this one is going to go. Oil's going to go higher. And at the time, crude was 40 or 50 cents lower. And I said, please, come on. We're smarter than this. This is the Middle East. There's shipping channels there. There's production there. Get out of your mind if you think oil's going to just fall apart. And here we are, $1 higher now.
Plus, it's in an uptrend anyway. But are the traders down there?
No, Mr. Schiff. I love you. You're one of my, if not my go-to guy in all things economic. No, it's not in an uptrend.
Oil's not an
uptrend. We dropped 10%. We were trading almost $94 a barrel a couple of weeks ago. It got down to 84.
No, we had a short-term correction, but I think if you look at where oil was a year and a half ago, I mean, oil prices have been trending higher. We were down at below $40 a barrel.
Here's my question: is the stock market an uptrend?
Long term, no. The stock market is lower than it was.
That trend has been broken. I mean, if I'm a stock trader, I'm selling everything with two hands out right now.
Yeah, but oil, 10 years ago, oil was $13 a barrel. It's still in an I think it's still in an uptrend. But what I wanted to ask you about, are the traders down there, are they looking at the numbers that really count? Because I remember way back when no one really cared about the jobs numbers or these consumer spending numbers that Wall Street is looking on. The numbers that were important were merchandise trade and money supply. And nobody, you don't even know that the trade deficit numbers are coming out anymore until after the fact, and nobody looks at the weekly money supply numbers. But are the commodity guys, are they looking at these numbers? Because that's what they were looking at in the 70s and the 80s when, people were really paying attention to this stuff.
No, I think on a weekly basis, you look at the inventory numbers because they tell a picture over the course of time, where demand is as the inventories draw down, especially in natural gas. those tell the picture. The weather, certainly. People watch the weather with bated breath, looking for the next cold trend. Those are the types of things that at least a floor trader would look at. Maybe your Goldman Sachs and the big investment banks may be looking at the bigger picture, things that you're talking about. But, you can be broke in 5 days trading.
Well, weather, a lot of people are trying. Seeing a lot of people trying to blame the commodity prices on the weather. And, certainly weather is always there. It's always a factor in one commodity versus another. But when you get a major move like this across the commodity spectrum, it's not the weather. And, governments always want to blame the weather because then it's acting like, well, hey, it's not our fault. It's beyond our control. They don't want to admit that it's inflation. They don't want to admit that if we're going to have all this government spending and we're not going to pay for it with taxes, then we're going to pay for it with higher food prices. We're going to pay for it with higher energy prices. There is no free lunch and there is no free government. And if we're going to have government services, we're going to pay for it one way or another. And if Ben Bernanke is going to print the money, it's not a get out of jail free card for the taxpayer. He's still going to feel it. He's going to feel it in higher prices. And the government wants to pretend that that's not the case. The government wants to blame other factors other than its own policies.
The problem is something that you and I have talked about quite a bit, is that as we borrow this money, we're paying interest on that borrowing. It's growing, and they're hanging their hat on economic growth coming back to the economy, saying that, well, we'll stop. 10 years down the road, we won't be borrowing any money. Well, that's if things work out perfectly for you in your little scenario. If things don't, we're going to be, $400 billion a year right now. We're
even if you buy their ridiculously rosy assumptions, when interest rates rise to normal levels, the economy can't handle it. Even if the economy somehow miraculously recovered, if interest rates go back up to 6 or 7%, with the amount of debt that we have, the economy cannot possibly service that debt, let alone pay back the principal. So I think that the debt is interfering with the recovery, that we will not recover until we tackle the debt head on and shrink government. So all we're doing now is compounding the problem. The more debt we have, the less likely is the economy to grow. And in fact, the more likely it is to collapse beneath the weight of all that debt. And we will really feel the burden when interest rates rise.
Well, we're lucky that I think someone did a study. I think we're paying around 2.8% on what we owe right now.
It's nothing.
We're lucky. If it was 2000, we would have been. Well,
Eric,
6%.
Look, hey, we're running out of time. Thanks for being on the show. Good luck with Follow the Money on Fox Business, and I'm sure I'll see you on the show soon.
And Friday at 9, Thursday at 10.
Oh, okay, that's why I don't know. The time changes. All right, that's Eric Boland, everybody. We'll be back after this break. Welcome back, everybody, to the Peter Schiff Show. This is Peter Schiff. I am taking your calls live at 855-4-SCHIFF, 855-4-SCHIFF. And let me go to the phones. We have some people who have been patiently waiting online. Next up is Kevin calling from Florida. How are you, Kevin?
Hey, Peter. I understand how the housing bubble was created, through low interest rates and the government, forcing banks to lend money to people who couldn't afford to pay it back.
And by government and by Fannie and Freddie, guaranteeing mortgage debt, and by the government giving people subsidies to borrow money. By allowing mortgages to be tax deductible and actually even encouraging real estate flipping. Remember when the government said that you can make up to $500,000 in profits by buying and selling houses tax-free, yet you couldn't do that with any other investment class. So the government got a lot of people into the real estate flipping business that otherwise would not have been there but for the tax breaks.
Okay, and now what were the policies that helped fuel the internet bubble? Was it low interest rates then, or what kind of policies?
Yeah, I mean, absolutely. What happened during the 1990s? Now, of course, the internet was there and it was revolutionary, and so I'm not saying that there wouldn't have been investment in internet companies anyway, and certainly some companies would have attracted capital and would have failed. So you would have had companies that failed without government interference. But what happened during the 1990s is there was a series of events that took place around the world, and every time it happened, Alan Greenspan created new money. Whether it was the blow-up at long-term capital, whether it was the insolvency of Orange County, the Russian debt default, the Asian economic contagion, fears over Y2K, anytime there was anything that threatened a recession or some kind of downturn or some kind of financial loss, Alan Greenspan was there to backstop the markets.